We'll go ahead and get started. We'll go ahead and call to order this interim meeting of the NCOIL Property and Casualty Insurance Committee. Will, if you will, at this time, please go ahead and call the roll.
Great, thank you, Mr. Chairman. We'll start with committee members that registered for the call. Representative Tammy Nuccio. I think she may be on mute because I do.
Yes.
There she is.
Hi there. How are you? I'm back to back all day, and my computer is buzzing with happiness here. So, just introductions. I'm Representative Tammy Nuccio from the state of Connecticut. Happy to be here.
Great. Thank you, Representative. Representative Carrie Austin. Representative Matt Lehman.
I'm here.
Representative Deanna Fraser Gordon.
Present.
Representative John Ilg.
I'm here.
Delegate Courtney Watson.
I'm here.
Senator Lena Thies. Representative Rod Furness.
Here.
Senator Walter Michelle.
I'm here on audio only.
You're a handsome guy, Walter. That's a shame.
Ready to go. Thank you, Tom.
Senator Bob Hackett.
Here.
Representative Lacey Hull. I know she said she was going to try and make it. She might be on and off. Representative Tom Oliverson. Okay. I do see Assemblyman Ken Cooley there as a committee member and NCOIL president.
Good morning.
And we do have Vice Chair Vicki Sawyer.
I'm here.
And we have Chair Rowland. And moving to other legislators who registered, Florida Senator Keith Perry. New York Assemblyman Jared Gandolfo. Kentucky Representative Jim Gooch.
Present.
Kansas Representative Bill Riley. Arkansas Representative Deborah Ferguson. I believe she said she couldn't make it at the last minute. I don't see Deborah here. West Virginia Senator Eric Nelson.
Present.
Are there any other legislators present that I did not call? All right, Mr. Chairman, we'll just need a motion to waive the quorum requirement.
Can we get a motion to waive the quorum?
So move.
I second it.
We have a motion and second. All committee members in favor signify by saying aye.
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 Aye, the quorum is waived, Will.
All right, we're all set, Mr. Chairman.
All right, thanks, Will, and thank you all for being on the call today. The purpose of today's meeting is for the committee to discuss pending model laws in advance of the upcoming NCOIL annual meeting in November. I know that we have set an ambitious timeline for this committee in terms of working on the models to be sure that they are ready by the November meeting, and we're making good progress and almost there. We'll start today, excuse me, with a continued discussion on the development of the NCOIL Delivery Network Company Insurance Model Act. We've been making good progress. There's been a working group that Brad will tell us a little bit about here just in a few minutes. And look forward to continuing the discussion today and getting everyone's thoughts on the latest version. Then we'll continue discussion on the NCOIL Insurance Underwriting Transparency Model Act that is sponsored by Indiana Representative Matt Lehman. He's also been making some progress on that and sure to be hearing some feedback from the industry. Lastly, today, we will continue with discussion on the NCOIL Dog Breed Insurance Underwriting Study and Breed Protection Model Act, sponsored by Assemblyman Kevin Cahill and NCOIL Vice President and co-sponsored by Representative Tammy Nuccio. Unlike the previous two models just referenced, there is no updated version of this model to discuss, but the co-sponsor would like to discuss some possible changes to the model in advance of November. The prime sponsor of the model, Assemblyman Cahill, unfortunately could not join us today as he had a scheduling conflict. And the last thing before we get started, just to be clear about today's meeting, the latest versions of the models are not necessarily what we will ultimately consider by the committee in November. There will likely be more changes between now and the 30-day materials, and there could be changes between the 30-day materials and the committee meeting in November. Again, the main purpose of the meeting is to continue dialogue and to keep these issues moving forward. So with that, we'll get started on the first topic, which is continued discussion on the NCOIL model of the DNC Model Act. We've been discussing this for several months now. There's a working group that has done a lot of work behind the scenes while the committees have not been meeting. And as you can see from the latest version of the model, there are some changes to the model, mainly related to the delivery availability period and delivery service period and the coverage limits. Other changes are minor and relate to the definition of personal vehicle, commercial insurance coverage, and the removal of some duplicative language in Section 3H. Regarding the coverage limits, we decided to increase the limits from 25/50/25 to 50/100/25, and we removed the requirement for uninsured and underinsured motorist coverage. However, there's a drafting note that is meant to account for different state coverage requirements. For example, here in Kentucky, UIM is required to be offered but not maintained. Also, the drafting note is actually pulled verbatim from the NCOIL TNC model, which is arguably NCOIL's most successful model, and we think it makes sense to follow that same approach here. I look forward to hearing from everybody in comments today, but let's go ahead and get started with interested parties, and we'll start with Brad Nail, who's been working on this issue with the group. Brad.
Thank you, Mr. Chairman. I think you summarized the changes well. There are really three major changes from the model language that was considered in Jersey City, in addition to some technical cleanup language changes. The three major areas are the required insurance limits, as you said, and also the change to the structure of those insurance limits, where the previous version was had an attempt to default to state minimum requirements, but at a minimum threshold level. Here, the new changes just set forth a limit that is, I think, clearer. It's consistent with parts of the TNC model that are tested and consistent with the way DNC's operated. I think it's clearer. It's more straightforward, among the stakeholders that I've spoken to, I've not heard any objections to the amounts or the way that this has been presented. The change to the language, I think, was important, and it reads in a very positive way now. The second major area is the removal of references to commercial auto and commercial insurance, so that all vehicles are treated the same. The definition of personal vehicle, where part of this was previously captured, had carried over from the TNC model, but it really wasn't needed in the way that it was presented in the TNC model. So we feel good that removing that puts all the vehicles, treats all vehicles the same. And if there are any conflicting requirements on vehicles that may be commercially operating, those are addressed in Section 2 that deals with conflicts of law. And the third major area are the further refinements in the delivery available period, both in the definition and the way and its effect. So, there are, we're trying to make sure that we don't accidentally capture activity that is not intended to be subject to these insurance requirements. We've had additional stakeholder meetings since the Jersey City meeting, and I know that there are some of the delivery companies that have some more suggestions on how to further clarify the delivery available period, just to make sure that, again, we're not capturing activity that's not intended to be captured, and therefore imposing a requirement on something that's not needed. The challenge there, and I think the goal universally, is to make sure that there are no coverage gaps. That's shared by the insurers, especially, and the other stakeholders. That's also the challenge in making further refinements. because the personal auto policy may exclude coverage, there is the potential to create coverage gaps. So any further changes, I think, must be analyzed from that perspective. Is it clear that there will be coverage at all times? And I think most folks will support further clarity, but without sacrificing the uniformity of the coverage in that way. So that's really where we stand. I think the improvements that have been made are fantastic, and we are that much closer to having a finished model. So thank you, Mr. Chairman.
Thanks, Brad, and thanks for your work, and thanks to the group that you've been working with for all your input on this model. Do we have any other interested parties on here that would like to make comments at this time?
You have Marty Young from Buckle. Thank you, Mr. Chairman. We're very supportive of the draft, and we thank you for all your support, and Brad, your leadership in getting us to where we are. Thank you.
Thanks, Marty. Do we have anyone on here from Amazon? I know Amazon had reached out to me through one of their Kentucky people earlier this week.
Yes, Mr. Chair, this is CJ Stolley with Amazon. We continue to work on the stakeholder work group. We do have concerns about the delivery available period, and we're trying to work through what an amendment might look on that. I understand there's some concerns with language we presented, and so we're working through the language, but we'll continue to work with the stakeholder group, and thank Brad for his work on that. Thank you, Mr. Chair.
Thank you. And please continue to communicate with us and with Will, the general counsel, on some thoughts that you have around that language, and we'll be glad to take a look at it.
Chairman
Mr.
Rowland.
Chair, yeah, we really would like to hear that, because, you know, the way the language appears, in order for that period in question to be triggered, you need to be in your personal vehicle, operating your personal vehicle, and operating the app. So that's pretty tightly crafted. You know, frankly, if you're doing all three of those things, there should be insurance coverage for it.
Further comments, I want to add something briefly. John Schnautz with NAMIC, we've been a part of the stakeholder group that you and Brad described. We're still looking at the new changes that came out earlier this week, but I will say on first blush, we don't have any concerns with them. We will be looking for whatever additional changes might be proposed. And just for those with a very good memory, I had raised an issue back at the July meeting that we wanted an explicit recognition of differences in limits that might exist across states. We can put a pin in that issue with the new version, because if you go to a uniform 50, 100, 25, you won't have cross-state differences anymore. So that obviates the need to go there. So just wanted to point that out as well. Thank you.
Thanks, John. Anyone else on the call? Any other interested parties have comments at this time? Any legislators, members of the committee that have comments or thoughts on this model? Okay, I'm not seeing any other discussion at this point. So thank you all again. If you do have suggestions on language or thoughts on the model or questions, please continue to communicate with me, with Will and Tom, and hopefully we can put something good together before the 30-day materials come out and pass this model in November. Okay. At this time, we'll move on to our second topic of the committee, which is the continued discussion on the NCOIL Insurance Underwriting and Transparency Model Act. So at this time, I will turn it over to Representative Lehman to discuss this topic. Matt.
All right, can everybody hear me okay? For some reason, my video is not working. I think it's probably a win for everybody today. But anyway, so I'll just get into the topic here. So first of all, thank you, Mr. Chairman, in teeing this up. I think it's a little bit like your DNC model. We've been discussing this model for quite some time, at least for the past several months. I do want to thank everybody who has given me some feedback. We've had good input, haven't had a lot of input, but we had some good input. we're making some progress. I'm confident by the time we get to New Orleans, we'll have a model that we can consider where states give them some guidance. I think it'll be a solid model act, to be honest. I will say this, I think a lot of groups have been kind of holding their cards close to their vest. I'd love to see some strong engagement in submitting some final comments here or formal comments, because I encourage everyone to weigh in on this yet before November as we get into this. I do want to draw your attention to a couple of changes. I think some of those may be significant, some are not as significant, that we've made since our last conversation. And I know even some of my conversations with some of the interested parties. I'm not going to get deep into the weeds on these. So I'm going to kind of do a 30,000 foot view on the changes, and then you guys can, you've got the model in front of you, you can see what we did. I know there was an issue originally around new business about the rate, and what we did is we said, this is really applying more to a declination only. And so on the new business, it would be if a person is declined, then they have a right to inquire. It was brought to our attention, and rightfully so, that there is some language on who can inquire. So we are changing that kind of throughout here, that it entitles the person to receive it as the insurer who has been, had this incident either on new business declined or on existing business having their policy increased, that they would be the one. It's a consumer only, not, or insured impact only, and not just a general consumer. I just want to know type of approach. We did a couple things, like we changed the word from charge to rate. There was some issue with, okay, so if there's a change in premium because of a client generated change, like I maybe added additional coverages, or I've added on to my house, my rate may stay the same, but my premium is going to increase maybe more than the factors. We want to make sure we're still focused on the actual rate changes and not necessarily just premium changes. I changed the trigger from the 7.9 to the 9.9. That brings us closer. I think a lot of states might be on their automatic triggers of notification. Again, open to some discussion on how that would weigh into your states. So to avoid some confusion and ambiguity, that we had the term primary factors when talking about those. We've just simply removed that from the model. The concept here is we were achieving that by talking about the most heavily weighed. And so we've just simply removed the term primary out of there. And one thing we changed here that I think is also significant is we changed the, we had put the 10 most weighted factors. And I think what I want to look at is, again, this is all about transparency and making sure that the consumer is seeing what is being used. So we changed it to disclosure being in no particular order. There's some concern from the industry that if we might show our hand and our secret sauce if we show how we weight them. In this case, you can simply say these are the 10 heaviest factors, and they're weighted however you want to disclose those. But I would know those are the 10, but may not necessarily the 10 in any particular order. I think that makes it a little bit a little more carrier friendly maybe. And then we put a drafting note in section 3 to emphasize the point that we're really trying to provide to the consumer more than just a 3-word phrase. Yes, we use data. So I think those are some of the more significant changes. And if I'm missing any, Tom or Will, you can jump in. But I really, again, want to hear your thoughts on these changes. As I've said before, I'm open to changes. I want to encourage feedback. I was at the NEIC Summit in Kansas City last week. I was really surprised at the multiple sessions that their sole focus was on the use, protection, and the transparency of data. So, it is an issue that's getting a lot of attention. We can't ignore it. We want to have the opportunity to provide those states that critical guidance before they go down the path of their own endeavors, which I think if you've seen in some states are not that good. I'm trying to find that place between a balance of, just show nothing to the point of being prohibited from using certain pieces of data. So I think we're getting this in a much better place. I'll be interested to hear what people have to say. And I think you heard from Chairman Rowland. We talked about, there's an opportunity to lean on the DNC model. I think the same is true here with the timeliness of this. So with that, I'm all ears the rest of the time, and if I can get my camera to work, it'll be a treat for everyone. And with that, I'll send it back to you, Chairman Rowland.
Thanks, Matt. Thanks for your work on this model. We'll first start with any interested parties who might have comments on Representative Lehman's model.
Mr. Chairman, I don't mind kicking off if you allow it.
Sure, go ahead, John.
Yeah, so once again, John Schnautz with NAMIC. Thank you. First, just thanks to Representative Rowland. He spent one very long conversation with me going over our concerns on the model. We're glad to hear him describe it as a work in progress. We certainly acknowledge there's been progress. We also think there's some remaining work. Just sort of as broad context for our comments, one of the things that we would emphasize, I think we emphasized in our July comments as well, is this, whatever NCOIL passes here is really going to be plowing new ground. There is not a state out there that I'm aware of that has a law exactly like this. There are some proposals out there, NAIC is talking about it, but on your current trajectory, you'd be the first to do this. And we think it's very important in that context to try to get it right. The second point, one of the other general themes of the remaining changes that we think should be made is really trying to focus on the value to the policyholder. It came up at the July meeting, in many cases, the ultimate result here is going to be that the policyholder goes out in the market and tries to find other coverage that they either like better, charges them less, whatever the case may be. That's the way the market works, as you all well know, and that's perfectly appropriate. Transparency has value in its own right, but it never comes free, and we really want the value to be there. So I do want to acknowledge the changes Representative Lehman made. We appreciated those. We noticed them and are continuing to look at it. Obviously, we've only had it for a few days. We will continue to do that. I guess quickly to emphasize a few of the points where we would see the need for some remaining discussion and potential changes. The model uses in a drafting note the concept of something not being inherently part of the risk. We fully support what we think is the intent there, which is to carve out of this model things that are traditional rating and underwriting factors. That's terrific. We're all for it. What we would prefer, and we'll be happy to provide specific language on this, is just explicitly carving those things out of the definition of external consumer data. And from our standpoint, it's really three categories. One is traditional rating and underwriting, MVR and CLUE, which are alluded to in the drafting note. Second one would be data or information that the policyholder is providing, and that would include through what they put on the application, through participating in a program like telematics. Again, I don't know that that's external data anyway at that point, but the policyholders certainly ought to know about it because they're providing it. And then the third category, I did emphasize this is plowing new ground, but there is an analog here with the NCOIL credit model. More than 30 states, I think, have adopted that at this point. We do think it provides a good framework for some of this because there is a disclosure part of that model as well. At the same time, we think information that's subject to the Fair Credit Reporting Act and the credit model ought to be specifically carved out of this act so that it's not a duplicative regulation, but that each has its own sphere. Briefly, just to point out a couple other things in the adverse action part of the proposal, we would prefer and continue to prefer that be limited to renewals, situations where you have an existing contractual relationship with the policyholder. Again, in the walk before you run standpoint, that seems like a good place to start here, and it could always be expanded from there. We also think the bill, and I don't think this is the intention, but to clarify on the premium increase portion, that statewide rate increases and changes in coverage initiated by the policyholder, I don't think the bill is intended to go there, but we would like for the model to just more explicitly lay that out. Then on the transparency requirements themselves, I made a reference earlier to the credit model. We appreciate the change in phrasing there, the most heavily weighted. Frankly, the credit model uses the term primary influences. We think that is analogous enough in this situation to simply say primary influences. The credit model also requires 4, up to 4. We proposed 5 in an earlier version, so we can't very much argue with 5, but we think that model provides some template there. And then finally, just as to the, the final point is making this on request. I talked about at the beginning, the value here. Policyholders are going to know when they're concerned about this, when they want an explanation. We think having this process be an on-request process will address the need and enable people to get more information without flooding them with information that they may or may not have any interest in. And so we think that's a positive improvement as well. I think those are all of our substantive points. We do have a few that are more in the procedural range. If the model's adopted, we think a longer lead-in time than 6 months is probably appropriate. A couple of other more minor details along that route, and we will provide those to Representative Layman directly. That's all. Sorry for taking a bit, but it's a big concept, and happy to answer any questions.
Thanks, John. Looks like Frank O'Brien has his hand raised. Frank, recognized for comments.
Thank you, Mr. Chairman. Frank O'Brien with the American Property Casualty Insurance Association. First of all, I want to echo Representative Lehman's comments relative to some of the verbiage which was articulated at the recent NAIC Insurance Summit in Kansas City. There is indeed a tremendous amount of interest on the part of the regulatory community as well as others in this issue. So it is clear that something is coming on down the pike, and Representative Layman recognized that early on, and we're looking, I think, as public policymakers to provide the sweet spot, if you will, in terms of appropriate policy in this area for state legislators to pursue. In that regard, I want to thank Representative Layman for spending over an hour with me at the NAIC's Insurance Summit discussing this particular issue. APCIA and its member companies have been working for the past several months on a comprehensive redraft of this particular model. Our proposal is currently going through our committee process, and will continues to go through that committee process. So I am constrained, still, sorry, from providing any specific details regarding that at this time, but APCIA will have a comprehensive proposal for NCOIL and the sponsor well prior, I hope, in the November meeting. Unlike, well, perhaps like both the DNC issue and in a preview, the dog issue that we're going to be discussing later on, I believe that there is a strong likelihood that a consensus can be reached on this particular issue. We are viewing this particular matter in our draft as a couple of its overriding principles. The idea of simplicity, simplicity in terms of the operational requirements for insurance companies, limited to personal lines, limited to a request in writing, and limited to certain specific situations involving a rate increase or a change, things like that. Simplicity in terms of the notice that would be given to consumers and insurance producers in the sense of making that disclosure something that would be useful. We don't think that it is either useful or appropriate for a company to provide reams of disclosure that would be indecipherable to anyone who is not a fellow in the Society of Actuaries. So we want to have something that would address the ability of the agent or others to provide the answer to the question, how come my rate went up? Which is the basic idea here. And then finally, provide an opportunity for the affected consumer or the affected policyholder to have a further discussion if needed with a person at a company who would have more information and would be in a position to be able to answer more specific questions relative to that. This proposal that I've outlined at a very high level, I think, meshes well with some of the provisions within Representative Lehman's proposal, particularly with the new draft. It does avoid, however, trotting, if you will, new ground that Mr. John noted, because there are a number of terms in the proposed model which are new, which could be subjective and which could tend to cause confusion, at least initially. Bottom line, we will have a proposal and we intend to engage extensively over the next couple of weeks with the chair and with this committee. Thank you, Mr. Chairman.
Thanks, Frank. Looks like Wes Bissett has comments as well. Wes?
Yes, thank you, Mr. Chairman. I appreciate the opportunity to comment on this. Representative Lehman spoke quite a bit about the conversation that occurred at the NEIC summit, I guess, last week on this topic and related issues. And it was just mentioned that the regulators have great interest in what's happening on this topic. I'll say that it's not just regulators who are interested in greater and more meaningful transparency in the rating and underwriting process. It's also the agent community. And it's for that reason that we've been very, at the Big I, very supportive of Representative Lehman's work on this issue and on this specific proposal. We really thank him for his leadership and work on this. We think that this will help to bolster faith and trust in the underwriting and rating process, and think it'll be kind of an extension of what's been required for a long time in terms of FCRA related disclosures. I just wanted to make a couple comments on substantive issues. I think one of the big issues that the drafters and NCOIL will have to address ultimately is the universe of factors that this disclosure obligation applies to. I agree with John that the addition of the phrase, data or information not inherently part of the risk is very subjective and unclear. And I think that NAMIC's proposed approach in terms of defining elements or factors that would be excluded from coverage in this is probably the best way to go, because it's unclear how that term really meshes with the term external consumer data. So bringing, the way to kind of define it and think about it is exactly what factors are we going to apply this disclosure obligation to, and then go from there. One other thing I'll say is if the drafters ultimately do opt to limit this to a upon request only type of framework, we would urge the drafters to also enable not just the consumer that's a subject of the underwriting or rating, but also that person's agent to be able to request this information as well. That agent is going to be sort of more closely wired into the company anyway, so probably some efficiencies actually in allowing that to happen as well. So I think, again, we really appreciate Representative Lehman's work. We're actually kind of intrigued by some of the suggestions that were proposed by NAMIC and look forward to those in particular, but think that the things are on the right track here. And again, appreciate everybody's time and focus and attention on this. Thanks again, Mr. Chairman.
Thanks, Wes. Do we have any other interested parties on the call who would like to make comments at this time?
Mr. Chairman, I would just like to, follow up on what Representative Lehman and what Wes said and what Frank said. The level of activity around this discussion activity at the NAIC summit last week in Kansas City I can't emphasize enough of what they said. And so, just to add to that, regulators who seem inclined to want to go really far on this, if there's a void in the legislative field and no activity at all, then they're going to go as far as they are inclined to go. And if there's legislation out there, facts are facts. Legislation doesn't always limit how far regulators are going to go, but at least it's an amber light, and will give some of them some pause if there's limiting legislation that is realistic and practical. So I would just caution all the interested parties not to let the perfect in their mind be the enemy of the good.
Thanks, Tom. Any legislators on the committee have comments or questions? Representative Lehman, do you have any wrap-up comments you want to make?
Yeah, thank you. And I appreciate I tried to take as quick as notes as I could here. I think there are several things that have been brought forth that are more in the field of wordsmithing, and I'm all up for that. And we look forward to working with NAMIC and ABCI and anyone else who wants to opine on that. Thank you, Wes, for the comments. I think I am hearing a lot from the agent community of just where I reside that we're just looking for something that we can convey to our clients. And I think the thing I noticed at the NEIC2 was there seems to be, there was one whole session on the loss of trust in the insurance industry back at the turn of the last century, and just making sure that concern stays, that people still continue to trust the industry. And we're going to do that, I think. And, Tom made the point of, we can't always, not every law, restricts what they do regulatorily, but they are really, several of them did come to me, and knowing we were working on this in NCOIL, and said, we're looking for some guidance, because, we're out there on our own, and many of these departments don't have the ability, either financially or actuarially, to really hire the staff to look at this data and say it's being used properly. So I think the guardrails we can put around this that allows the carriers to continue to operate like they have been, but at the same time give a little more transparency to the consumer is going to take us in the right direction. So looking forward to working with you. Looking forward, Frank, to your input from your association. And thank you, John, for the calls we've had. Like I said, anyone else, you can get a hold of me, and we'll keep working on this and hopefully have a really good product come November.
Thanks, Representative Lehman. Any other comments or questions before we move on to our final topic?
Well, Bart, this is Ken Cooley. If I can just jump in.
Yes, sir.
I was off on my wife's birthday last week, so I didn't make it to Kansas City. So I'm sorry for that. The traditional problem that the insurance industry has is the way it operates. People don't understand it. And from time to time, the industry sort of gets in all kinds of people sort of crosshairs out of that failure to understand how the industry operates, how rates are constructed. People get a bright idea, they want to revamp things, they want to get to a different outcome that they have in mind for somebody. And it ends up being very disruptive to the underlying working of insurance. So I do want to note that ultimately, it is very important in the insurance industry how their rates are established, the rating law, that they have an adequate rate, that concept which most people wouldn't understand, that the insurance code is set up to protect the adequacy of rates. That's the first line of defense to a healthy insurance system. We then have the guarantee funds that are set up if rates somehow are not adequate. And this conversation to kind of focus on what is essential and how do you have transparency around the rating system, ultimately, I think, is a conversation that I do commend Matt for jumping into this area. I do think it starts getting into conversations that relate to how the rating system works, what is in a rate. I think it can be seen as an opportunity, sort of an educational tool, actually, to explain how rates work, why that makes sense, what adequate rates are, an acknowledgement that some stuff is minutia that we can have transparency around and should not have a big impact on the rate. I would just say, honestly, for the industry, I think they should view this conversation conducted by NCOIL almost opportunistically to see it as an educational tool to walk people through the basics that the industry depends on. So that if truly bad ideas come around for achieving a policy outcome at great disruption to the industry, you're sort of positioned to deal with it. But yeah, I just think there is so much that is fundamental about the insurance industry that this conversation gets into. And sometimes you may not like it, but when focus happens, you need to use it opportunistically to educate. And I think that the various cross-section of issues present here makes this a good time to do that. That's it. Thank you, Bart.
Thanks, Ken. Thanks for those comments. Not seeing any other questions or discussions at this time. We'll move on to the next topic. Just be sure if you do have thoughts or comments, and you please communicate those directly to Representative Lehman and to NCOIL staff, and continue to work with them on putting this model together. The last topic today will be continued discussion on the NCOIL Dog Breed Insurance Underwriting Study and Breed Protection Model Act. As I noted earlier, the sponsor of this model, Assemblyman Cahill, couldn't join us today. He has a scheduling conflict. But we do have with us the co-sponsor of the model, Connecticut Representative Tammy Nuccio, and I'll turn it over to Tammy at this time to discuss this model.
Thank you very much, Mr. Chairman. One of these days I'm actually going to meet Assemblyman Cahill, but we're co-sponsoring a bill. I don't think I've ever met him, but that's okay. I'm really happy to serve as the co-sponsor of this model. It's a topic that's been kind of near and dear to my heart, and I appreciate the conversations that we've had thus far in the last couple of NCOIL meetings. I really think it was discussed at maybe my very first one over a year and a half ago. So I'm glad to see that we finally got some consensus here, and we're going to bring this to fruition. The biggest thing that I took from our last meeting in July was that both the insurance companies and the property casualty insurance companies and the dog advocates supported the removal of Section 3 of this model, which focused in on the data collection. I was happy to hear that myself, as I've been kind of pursuing that here in my home state of Connecticut also. I agree with the removal of that section, as does Assemblyman Cahill. However, we also both believe that the data collection section could be set forth as a separate model for further discussion next year. It would take some real fine tuning and some work to figure out what we wanted to request in that data, but I do think there's value in data, call it the analyst in me. We have asked Will to prepare the data section in a standalone format in the event that this committee or its new chair wishes to pursue it next year. But for now, the best path forward is to proceed with focusing in on Section 2 of the model, which was agreed upon at the last meeting. With that change, one of the things that I think we need to adjust is the title of the model, which would be better suited as something along the lines of equity and liability coverage for dog owners, rather than the discrimination that's in the title currently. And since the data collection section is going to be removed, I have been working with the advocates on this for over a year now, and we've had some really good discussions with people on both sides who are very passionate about this issue, myself being one of them. And a few things that I'd like to offer in the discussion here is whether or not the model should apply to commercial insurance policies. This was recently brought up at a meeting that I was just at with the advocates. And while I think this is something that we can eventually look at, I don't feel like we're ready right now. I don't want to tamper down the excitement that we have with the bill going forward. This is something I think we should not include right now, but not let drop off the radar either, to find out if this is really an issue in the commercial insurance industry. And then if it is, we can adjust it at an upcoming meeting. The second piece is whether or not there should be a don't ask, don't tell provision of this bill, which would state that an insurer can't ask or inquire about specific breeds or mixtures of breeds of dogs, but they can ask if the specific dog that you have is known to be dangerous or vicious, or has been declared to be dangerous or vicious in accordance with state law. Nebraska has this legislation, and this is something that I think is we could include this. This does focus in again on the specific dog and not specific in any kind of specificity with the breed. And then whether the last piece here is whether the effective date of the model should be lengthened so that insurers have some more time to comply. The current version states that it shall take effect immediately. My inclination on this is that we should probably allow some time for it to transfer, but I don't want it to be a long engagement period here. I would look for us to find a reasonable time for the insurers to be able to comply with this and move forward. And I would hope that it would be a short, reasonable period. That's all that I have right now, Mr. Chairman. I'm definitely looking forward to the discussion today or any conversation that may be had that can help bring this bill to fruition and hopefully its passage in the November meeting.
Thank you, Tammy. Thanks for your work and continued work on this bill. Looks like we do have a couple of folks that want to be recognized. We'll start with Letty first.
Thank you, Chairman. And again, I appreciate continued work on this. And Representative, I wish you would have had your dog with you. I think that he would be
He's here.
Okay,
Chief.
okay, good. That's great. That's great. But yes, we really support the legislation. We're glad that the data portion is out. We do think there needs to be a better title because it really is a consumer bill and it's about equity. And so we think the discrimination should be stricken and that it should basically be equity and liability coverage for dog owners or maybe dog owning consumers. We agree with the effective date being lengthened because that would be pretty hard for insurers to immediately change their policies. And I would support the don't ask, don't tell section that is similar to what Nevada has in, not Nebraska, just a quick correction there. But I know the end states are kind of similar. So Best Friends is very pleased with working to continue to work with the industry on this and Representative. So thank you.
Sorry for messing up the state.
Bart, you're
Bart,
muted.
you're on.
Sorry about that. So this looks to be our most interested topic today. We've got about 4 interested parties signed up to speak. We'll start with Frank O'Brien, who was first to raise his hand.
Thank you, Mr. Chairman. I'm glad those lessons I learned in kindergarten have finally come in handy. So a couple of things on this particular issue. It may have seemed daunting or impossible when this issue was first discussed at NCOIL, but we believe that we are poised or at a place where there is a very strong likelihood that NCOIL could find itself with a model that is supportable at the November meeting. A couple of comments first. We thank the sponsor, Representative Nuccio, the co-sponsor, Representative Nuccio, for her comments regarding removal of the data provisions. I think that there's widespread agreement on that particular language, and we would support that as well. We also appreciate her comments and the comment from Lady Vinkevich regarding changing the title of the particular model. We're supportive of that as well and look forward to working with the sponsor and staff to accomplish that. Relative to the commercial insurance issue, as well as the don't ask, don't tell language, we would caution on both, and we agree with the co-sponsor, at least on the commercial lines, a portion of it, that let's not let the better be the enemy of the good on this particular one. This is a hard-fought compromise, and while there is a possibility of having discussions on the commercial line side of things on down the road. Commercial lines is a significantly different beast than personal lines. So we would like to see this at least initially limited to personal lines, and we appreciate the sponsor's comment to that. The most significant concern we would have at this particular point in time is the so-called don't ask, don't tell language. I have not had an opportunity to review Nevada's language. Thank you, lady, for that. We'll take a look at that. But again, in the vein of don't let the better be the enemy of the good, we do have significant concerns with language that goes into the realm of limiting commercial free speech. Commercial free speech is as it has to be, a significant concern for insurers. Indeed, it should be a significant concern for all public policymakers, as there is Supreme Court language on this. And basically, to paraphrase it, and I don't want to be held to this, the language has to be narrowly tailored to support a state interest. So you're getting into significant First Amendment issues when you do put in don't ask, don't tell language. And I would caution NCOIL relative to that. I have not had an opportunity to review the proposed language, but I would just state that that's our initial reaction. Having said that, with the removal of Section 3 changes to the title, this is language that APCIA could support. With that, Mr. Chairman, I'd be happy to answer any questions.
Thanks, Frank. We'll move on to John with NAMIC next.
Yeah, thank you, Mr. Chairman. John Schnautz with NAMIC. Once again, very briefly, my own metaphor, I won't plow the same ground, but I guess really glad to hear Section 3 will come out. That was our concern with the bill, frankly, at this point with the model. The other changes, we would look forward to seeing language. I think my initial reaction to them, hearing them just today, was similar to Frank's, but look forward to seeing language. We'll review it, and happy to engage in conversations from there. Thank you.
Thanks, John. Next, we'll move on to Jennifer Clark with AKC. Jennifer, you're still muted.
I apologize for that, Chairman. We are having technical difficulties here. Ian is on his way. So I apologize. Hopefully I won't lose connection here. I am down in North Carolina. Jennifer Clark with the American Kennel Club. I first want to say how much we're loving seeing the best part of Zoom meetings is seeing everyone's dogs. So thank you very much for all of you who were showing your dogs or pictures of your dogs. It made my day. Just wanted to echo the comments made by others that we greatly appreciate Section 3 being removed. That being said, we are very happy to work in the future. If you do want to do some sort of data collection, AKC would be happy to provide our expertise to provide some input on that if we want to go forward with something in the future. But at this time, we are very grateful that Section 3 is removed and look forward to seeing other language regarding don't ask, don't tell, or and also the title change. We very much appreciate all the work that has been done on this to make this fair for dog owners and also still protecting public safety and property. So thank you very much, and we look forward to continue to working with you all.
Thank you, Jennifer. Next, we'll recognize Susan Riggs for comments.
Hi, thank you so much for having this special session to discuss the model law. This is something that we've been working on nationally in a number of different markets, and we're finding that there's a lot of interest. And so I think the model law just in general is super helpful so that we have some consistency across the states. That said, in the interest of time, I'll just focus primarily on the one outstanding issue. At least it sounds like it's the last outstanding issue, is the use of breed as a criteria just generally. We provided a letter with some citations, and I think what we're most concerned about is the inaccuracy of identification of breed, number one. Number two, the lack of correlation with breed and risk. And that is the basis of the issue. And as long as breed stays in the criteria that can be utilized in underwriting, then it's still a very opaque way to determine whether or not a policy will be written and at what cost. So breed really needs to be eliminated. You can look at any study of factors leading to aggression in dogs, and they will cite a number of other factors, many of which are in our letter, many of which are in the research pieces that I've cited in our letter. And any of those factors are fair game. The problem is breed is misidentified and breed does not correlate. And so it just needs to be removed. It does not need to be a consideration. And just from the consumer perspective, it is so very harmful. It trickles through, and at a time of housing instability, just generally, to have breed as a criteria is so hurtful to so many people, and we see it everywhere we go, and especially right now with folks getting evicted and the protections being removed and folks moving around in the markets. It really is very detrimental to consumers. Without any basis in science or data to justify it. So with that, I'll close, and thank you again for bringing this forward for discussion, and thank you, Representative Nuccio, for being a co-sponsor on it.
Thank you, Susan. And finally, we will recognize Jessica Simpson for comments.
Hi, everyone. Thank you so much. I'm Jessica Simpson with the Humane Society of the United States, and I'll keep this short. I appreciate the committee's continued work on this matter, and we'll echo both Susan at the SPCA and Leedy's comments. We support the removal of Section 3, appreciate the updated title to more accurately reflect the purpose of this model bill. And we would support the don't ask, don't tell language. And with that, thank you so much.
Thank you. Did I see another hand go up briefly?
Yes, Chairman, I'm sorry about that. I came in last minute there. So good afternoon.
If you have comments, please proceed.
Yes, just a few. Good afternoon, everyone. Thank you for the opportunity. My name is Ngozi Anaiji. In our last meeting, in the July meeting, I represented kind of the Black agency population within our industry, and kind of Black and Brown ages and those that represent Black and Brown communities. I just want, we do some work, obviously, with the National African American Insurance Association and also Best Friends. And so just wanted to make mention that we are in agreement with those things that have already been indicated as changes to the bill, but also wanted to make statement of appreciation around just the recognition and the implication that the use of breed restrictions, to Susan's point around the underwriting practices, can lead to implications of discrimination and racial bias. And so we appreciate the recognition of that, and even in the change of the name to equity to some sort, or in some fashion, we think that might be a little bit more palatable as far as the title. But also want to make mention as an independent agent that do appreciate the consideration around the commercial lines. Just from the experiences I've had as an agent here in Connecticut, we are seeing more and more of our small businesses open up to pet-friendly type of environments post-COVID. And so that potentially being a consideration around risk and appetite, and questions that are being asked by underwriters around what these small businesses or how these small businesses are allowing these pets, and whether the guidelines and the policies that they have in place. And so we just want to make, put that on the horizon. We appreciate Representative Nuccio just bringing it to the forefront, and then hope that we can have some future discussions around it, around the commercial implication. So thank you for that.
Thank you. Thank you to everyone for the comments. Is there anyone else, any other interested parties or legislators who would like to make comments on the model at this time? Representative Nuccio, you had several comments. Anything you'd like to say before we move on?
No, I'm good. Thank you very much. I appreciate the conversation, and I just look forward to continuing to work with everybody.
All right, thank you. Any formal comments, please direct those to Representative Nuccio and to NCOIL staff. They'll continue to work on this model, and sounds like bring something forward. Thank you all.
Bart, you muted yourself.
That's all the topics that we have for today. But one last piece of business before we adjourn. As most of you know, registration for the November NCOIL annual meeting in New Orleans is open now. If you haven't registered yet, please do so. Also, a reminder that on the first day of the New Orleans meeting, we'll be holding the first annual NCOIL golf outing to benefit the Insurance Legislators Foundation Scholarship Fund. And if you haven't registered for that, please do so. You can find all that meeting and golf registration information on the NCOIL website or by reaching out to NCOIL staff. If no other business to come before the committee, I would entertain a motion to adjourn from a member.
Motion to adjourn.
Second.
We have a motion and a second. All in favor? Aye.
Aye.
And we look forward to seeing you all in New Orleans.
Thank you, Bart.
Thank you, Bart.
Good job.
Thanks, everyone.